People still don't get it. Every single Bitcoin cycle is the same. Price pump, then they dump, exchanges collapse, crypto companies disappear, and projects that everyone thought would change the world never recover. Influencers vanish, people panic, and the media declares Bitcoin finished or dead. And again, millions of investors convince themselves that this time is different. But Bitcoin always comes back. Every cycle, it wipes out the weak projects, it clears out the excessive leverage, it forces out impatient investors, it exposes scams, and when almost everyone has given up, when fear is at its highest, that's when it slowly starts climbing. That has been the cycle for more than 15 years. But something has just happened that looks very familiar. While the headlines have been telling you that institutions are selling Bitcoin, some of the biggest Bitcoin holders in the world have quietly been doing the exact opposite. According to a recent on-chain data, Bitcoin whales accumulated around $16.7 billion worth of Bitcoin in just 2 weeks. At the same time, US spot Bitcoin ETF finally ended their streak of outflows and recorded a day of positive inflows. So why are the biggest players buying while so many retail investors are still scared? Let's break it down. Over the past few weeks, sentiment across the crypto market has been extremely negative. Bitcoin pulled back from its recent high, and social media is filled with prediction that the bull market was over. Many investors start selling because they believe the best days were behind us. But smart money doesn't always move with the crowd. While many ETF investors were reducing exposure, blockchain data showed large Bitcoin holders quietly accumulating billions of dollars worth of BTC. These are the investors often called whales. They are individuals, companies, funds, and institutions holding enormous amount of Bitcoin. And historically, whales tend to accumulate during periods of fear rather than excitement. That's one reason many experienced investors watch on-chain data so closely. Then something else happened. After a long period of daily outflows, US spot Bitcoin ETFs finally recorded net inflows again. Another piece of the puzzle is the wider economy. Recent US economic data has strengthened expectations that the Federal Reserve may have more room to lower interest rates in the future. And why does that matter? Because lower interest rate generally increases liquidity and make risk assets like Bitcoin more attractive. That's why crypto traders are watching every major economic report just as closely as Bitcoin itself. And at the same time, Michael Saylor's company strategy continued to dominate headlines. Many people misunderstood its recent announced treasury flexibility, believing it means strategy was preparing to abandon Bitcoin. That is not what was announced. Strategy remains the world's largest corporate Bitcoin holder. The change gives the company more financial flexibility, but it doesn't change its long-term conviction in Bitcoin. It's another reminder that headlines often tell only a part of the story. So where does that leave us? Right now, we have several important signals happening at once. Whales are accumulating and ETF outflows are positive again, and institutions continue building crypto infrastructure. Governments are introducing clearer regulation. And yet fear is still dominating social media. So nobody knows exactly what Bitcoin will do next. Bitcoin has the habit of surprising people exactly when they are stopped believing in it. So here's my question for you. If Bitcoin drops another 20% tomorrow, would you panic sell or you buy alongside the whales? Let me know in the comment below. Subscribe if you haven't done so, and follow us on X and join our Telegram community. Thank you so much for watching, and I'll see you in the next one.